Renee and Desmond are sitting at their kitchen table on a Tuesday night, and there's an envelope between them that neither one wants to open. It isn't a bill. It's from their mortgage servicer, and the subject line reads Annual Escrow Account Disclosure Statement, which is the most boring arrangement of words in the English language, and also the reason they're about to have the worst conversation of their marriage. Desmond opens it. Their payment just went up $307 a month. Not their rent, not an adjustable rate. Their 30-year fixed mortgage, the one their loan officer kept calling locked in. They didn't refinance, they didn't miss a payment, they didn't sign a single new document, nobody even called them. The interest rate on that loan is exactly what it was the day they closed, down to the decimal, and it will still be that number in the year 2056. The rate is locked in. The payment is not. My name is Nick, and I've spent an unreasonable amount of my life reading mortgage paperwork nobody is supposed to actually read. One thing now that we'll come back to at the end. There was a single line on Renee and Desmond's closing paperwork that predicted this exact night. They saw it, they initialed next to it, nobody explained what it meant. Let's start with the uncomfortable part, which is that none of this was really a mistake. Here's the thing about how houses get sold in America. You don't buy a house. I know it feels like you buy a house. You tour it, you love it, you argue about it in the car on the way home, but at the moment you actually decide, the thing being sold to you is not a house, and it isn't even a price, it's a monthly number. Every participant in that transaction has worked out that you decide on one figure, and that figure is your payment. So your payment is what they engineer, basically down to the dollar. And I don't mean that in a conspiratorial way, I mean it in a documented, publicly reported, said out loud on an earnings call way. DR, Horton is the largest home builder in the country. In their fiscal fourth quarter of 2025, about 73% of their buyers got a mortgage rate buydown. 73%. That is not a promotion, that is the business model. Their communications executive told investors they were leaning in harder on advertising a 3.99% rate, and that the average rate sitting in their backlog had dropped below 5%. Meanwhile, their gross margin on those homes fell to roughly 20%, down from nearly 27% a few years earlier. Read that again because it's the whole game in two numbers. They spent enormous amounts of their own profit to lower your payment. They did not lower your price. That isn't sloppiness, it's precision. Cutting your sticker price by $40,000 torches the appraised value of every other house in that development. Spending $30,000 buying down your rate moves your monthly number the same distance without ever touching the comp. You feel relief. Your neighbors keep their valuation. The only casualty is your understanding of what you just agreed to. So you sign, feeling responsible because the payment fit. And here's what nobody warns you about. The payment you qualify for is not the payment you're going to make. Not because anybody lied to you. Because of what's inside it. Let's put real numbers on Renee and Desmond, and I want to be clear that these two did nothing you wouldn't have done. They're 40 and 38. Combined household income of $94,400, right around the national median for first-time buyers. They waited. They saved. They put 10% down, which today is somehow above average for a first-time buyer. They bought at $412,000 below the national median existing home price. Put 10% down on that, and you're handing over $41,200, which leaves you a loan of $370,800. At 6.66% on a 30-year fixed, your principal and interest lands at $2,383 a month. That's the number they focused on. That's the number the calculator on the listing site shows you. And it's a real number. Yours will never change either. Now add everything that calculator quietly skipped. Your property taxes escrowed at $342 a month. Your homeowner's insurance, $198. And because they put down 10% instead of 20%, private mortgage insurance, $170. That's the fee you pay for the crime of not already being rich. It insures your lender. If you default, it pays your lender, you buy it. Congratulations, add it up, and the actual payment is $3,092 a month. Welcome to homeownership. Run their gross monthly income and you get about $7,867, so they're at 39% before a single other bill. But you don't spend gross, nobody does. After taxes, they're bringing home near $5,907.